Hi Ross, welcome. This is so exciting to have you at the Shareplicity 2 book launch. I wanted to extend a big thank you for endorsing the book. It was really, really exciting to have such a, well, let's say fantastic US asset manager that actually has read my book. So thank you very much. And I thought that we would use this opportunity for you to discuss a new wonderful product that you have coming to the market, which is an actively managed US ETF. And obviously, this type of platform allows Australian investors to actually participate in your fund management, asset management style. So I thought maybe you could give some of the Shareplicity followers and friends an idea of how this new product is going to work.
Well, firstly, thanks for having me on. And, when I agreed to read your book, I've been super busy, so I wasn't thinking about my time effectively. And so I was really worried actually that maybe I wouldn't like it. So when I read your book and I opened up the first page, and I don't want to ruin the surprise, but the first chapter was like right up my alley. And as I went through your book, I realized that you were making some very good fundamental arguments and putting a lot of data behind a lot of the things that we do in my firm and as I do as an investor my entire career. And so I really felt with this thematic approach that we use and the way your book describes investing for the future, that they're very complementary. And so, in fact, I think people in Australia who want to get exposure similar to the way your book describes, my fund is going to be very similar in focus. So our fund launches July 2nd on the New York Stock Exchange. The symbol is going to be GK. And it's a multi-thematic fund where we really look at the 9 main themes we focus on as investors here at my firm, and building a portfolio around those 9 themes. It's going to be about 40 to 45 stocks at this point, and really giving opportunity for investors all around the world to take advantage of active fund management, not passive fund management, but also being focused on the future.
Fantastic, Ross. And there's been a little bit of criticism around an active ETF because of funds flows when you get a market drawdown or too much money coming in. And I know that Cathie Wood has kind of received some criticism or concerns about her active ETFs. How do you see that whole funds flow thing? Obviously you don't perceive that as being a problem for your new product that's coming to market?
Right. See, most people don't fully understand the way ETF works, and rightfully, because it's a highly complex, actually, investment vehicle that's very different than a mutual fund. So fund flows don't actually function like a mutual fund where money comes in and money comes out every day based off what investors do. In fact, it's really a basket of stocks. So if people buy the ETF, they're basically buying this basket of stocks managed by the market maker. And so fund flows don't matter. I think when they're talking about Cathie Wood's positions, she has a couple smaller companies where she owns a lot of the stock, and the issue is about liquidity if there is a drawdown. But in our fund, we won't have that issue because most of the companies we own, if not all of them, are fairly large and very liquid. So I think this is an issue that's probably talked about much more than needed to be.
Oh, right. One of the really interesting things, apart from the macro secular big trends that I discussed in the book, one of the things that I find so exciting for investors globally, and obviously Australian investors, is the fact that retail punters, investors now have access to people like you. And this never existed before. I mean, I'm old enough to remember when we used to basically look at the annual report and it was a hard copy, and as an analyst we'd be dragged in to see the CEO of a company, and the fund managers kept everything, or the asset managers, very, very quiet and to themselves. But we've seen an incredible democratization, I think, of investing, and I think GerberKawasaki and what you do on social media is just amazing, and you're incredibly generous with your time and your thoughts on companies. And I just really wanted to compliment you and say that You've got a very, I suppose, progressive and socially progressive platform, and you might want to just touch on and how you see the role of more professional fund managers with interacting with retail investors now.
I think you brought up an incredibly important point about the way investing has changed in the last 20 years. I've been doing it now 27 years. I'm on my 28th year now. And I always came from the perspective, because I'm a Grateful Dead fan, a Deadhead, is that you give away a certain amount of information, but you make fans, and then those fans become really loyal, ideally clients, and they're very much a helpful part of the marketing of our firm because we get most of our business through referrals. So by being open and transparent about what we own, what we trade, why, how I think about markets, what I'm doing, I don't tell people exactly what I'm doing as I'm doing it, obviously, because I'm in the making money business, but we disclose things very rapidly to our investor base and to the public. We just sort of feel like people should be informed when they're making the decisions of which fund to buy or which stock to buy. We provide financial advice. What better way to show people the quality of our advice than by putting it out there? And, I've never been scared of the criticism which comes with being very vocal on the internet, which is a part of it. But we get so much positive that it's well worth it for us. But I think in general, our industry has changed so much, and retail investors have always been an important force, but have had limited access to information. And the internet has not only opened that up for people to do their own research, learn about companies, meet CEOs, but also have access to people like myself. But when you think about it on a global basis, whether it's in Australia or Nigeria, now there's apps where you can buy US stocks all around the world, and it's a huge advantage for Australian investors. I spent some time in Australia as a kid because I love the country, and I almost moved there after college because I actually fell in love with an Australian girl, and I almost did that. But I didn't. But I remember spending time trying to study the Australian markets, and there was 10 stocks, that were good. And I think it's the same 10, honestly, there's not that many stocks on, I heard they're fighting over Crown Resorts again, and I'm like, it's like nothing changes in Australia. So if I want to build wealth and I'm Australian, I've got to look at foreign markets, and the US markets will always be the best place to build wealth. And that, I think, is one of the things about Twitter and the democratization of advice is now global investors can really learn and take advantage of the US markets.
Oh, I couldn't agree more, Ross. About 6 years ago, I basically came to that sort of view because for a long while, Australians couldn't buy US stocks. And I'm like, I don't want to hold the banks anymore. I'm not a big resources fan. It's like, I really want to be part of this technological revolution. And that was something that I really focused on in the book. I mean, I'm a progressive person at heart, and I'm also a Tesla fan. But I really wanted to emphasize to people that the cutting edge innovation and technology is still very much happening in America. And my son goes why? And he's 20. He goes, oh, Mum, I'm just going to sell everything in Australia. It's so boring. I've got to invest in the US. So I guess if you had to pick an innovation or a technology or a platform for, the Shareplicity followers and those that are going to read the book, what would kind of be one of your top picks?
As far as a trading platform?
No, sorry. I meant in terms of a thematic, would it be electric vehicles?
My favorite theme?
Yeah.
Well, I like 9 themes in particular, but where we're most invested is really in two areas, if not 3, if you count the third. The first is obviously technology, AI, and fintech. There's so much innovation happening in technology. We've moved past the social media era, and now we're really looking at AI and how we can, better utilize mobility and learning to improve our lives. And I think there's major innovations on the horizon in many different industries, like driving, for example. And then what's happening in fintech with Bitcoin, as well as just the democratization of finance through apps, and that what I think is the end of the current banking system. So we see huge opportunities in the Square and the PayPals and the Coinbases and the way technology is changing finance, which we're a part of as well. So I think that sector in general, technology is always a great sector. And then secondly, climate change is probably our biggest theme that I think has the most consequence for society. And that's why it's so important to us. And it starts with Tesla, but it's much bigger than Tesla. It's battery technology, which we're investing in heavily, which actually does involve commodities. But battery technology, solar power, wind, renewable energy, all the different parts of building a solar and battery platform, as well as the EV and autonomous space. So electric vehicles, I think, are ultimately one of the biggest transformations we're going to see over the next decade. So investors need to be invested in technology and AI and such, but also in the things that are going to affect and deal with climate change. And Tesla is probably the leader at that, but there's many others like NextEra Energy or many other ETFs that are focused specifically in this area. And of course, my fund will have all these sectors included in it.
Fantastic, Ross. Well, look, I'm going to leave it there because you've just mentioned some of my favourite sectors as well. So I'm going to have to work out how I'm going to squeeze your active ETF into my portfolio because we've got quite a lot of stocks overlapping. But I just wanted to say thank you again. I really appreciate the endorsement. I love chatting to you. I can't wait to welcome you to Australia. Or maybe one day we might get to Los Angeles. I haven't been there for years and years and years. But thank you so much for your time. And I want to wish you all the best with the ETF. And obviously I will be tweeting away furiously once it's listed. So thank you, Ross.
Thank you, much appreciated. And just the same, we'll be spreading your book around to all the kids at the firm to read.
Cheers. Thanks, Ross. Bye.
Yeah, thanks.